Hi everyone, welcome back. Today let's look at TurboTax and we want to see what if we only sell the rental outright and we are not gonna put the installment sale, so we're gonna see how much of a capital gain tax that we have to pay. So let's look at the screen. I'm just wanna let you know that I do a little bit of setup. So basically, this is marriage filing jointly, but I'm only put the W-2 to be the total income is about 150K. And when I calculate the federal tax withheld from this paycheck, I basically enter the same number that you would be liable. So basically, I try to zero out the federal and zero out the state, so we can see the impact of our income with the rental. So we have a rental. So if you enter your rental into TurboTax in the past, and then I also enter the 2023 already. So we have some income and we have some expenses from the rental part of it. And then for the property, how you want to trigger the property being sold, you do that by going back to the rental property info. So just say that you have a property that you enter in 22, but in 23 you sold it. So you would go back to the info section for the property, and then you would click on the situations and then click edit, and then you choose which boxes apply to your situation. So in this case, we use sold. So that's how it marked the property was been sold, and we enter in the sale price and later. So basically, to enter the sale, because it's a rental, so you don't want to go to other section. You want to start from the rental section. So this is where you would go to enter your sale. So basically, go in here, and then we already have our rental. So we go to edit, and then we're gonna choose what kind of property this was. Was it a tool machine, computer? No, so it's rental real estate property, such as land improvements, or real estate property, or rental property appliances like carpet, furnishing. So if you dispose or retire an asset that in your rental, like your dishwasher, that kind of thing, when you're done with the item and it's no use anymore and you want to take it off your tax, which you should, then you can go in here and choose this category. But in our case, we are looking at calculating the capital gain tax for the sale of our rental. So tell us a little bit more about your rental assets. So it's going to be residential rental real estate. And then next, it's asked about, tell us about this rental asset. So we're going to describe the rental. So usually we want to put the address because the address is pretty unique to each property, right? And then we enter the cost. So in our example, it's $600,000, and the cost of land that was included in this was $120,000. And the date that we purchased it was 1/1/2020. So we put it in to the date of purchased box. And then tell us about this asset. So we want to check that we purchased this asset before, like we did not trade it in, or we did not inherit it in some way, right? And then if you check this item was sold, retired, and then if you check that box, the date sold gonna pop up. Because see, if you don't check that box, it doesn't pop up. So you gotta check that it was sold. You enter in the day that you sold it. For our case, it's September 30th, 2023. Have you used that item 100% for this business and you acquired it? So we would say yes. We always use this item for 100% of the time for this business. And then this question is asking us to enter the date that you first started using it for business. So that is the date that you place it in service. So it just happened to be the date, the 1/1/2020, because our rental property, when we bought it, it was turnkey, so everything was ready. click continue, and then confirm your prior depreciation. So because we bought this property and we used it for, we've been using it as a rental for the past few years, so the system already give us an amount that it calculate for depreciation that were in prior year. So this is excluding 2023. So I'm just going to use the number the system calculate, but if you use TurboTax during prior year, it will carry forward that information for you. Then now it's asking you, is there any special handling required? Select yes if any of these conditions describe your situation. If the business you presented assets vary during the year that you own the assets, so if say you use it for 1 year and then you stop using it, or you rent it out for maybe 60 days and then you come in and stay for a month, 30 days, and then you rent it out, so those vary, then you click yes. This is an intangible asset not considered Section 1245 property. This is not in our case, and you can click on learn more to understand what it's saying. So only computer software and intangible amortized under section blah 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 is considered 1245 property. So this was not our rental. You converted the assets to 100% personal use. That was not our case, right? You gave the asset away as a gift. No. This asset was lost or destroyed due to casualty or theft. No. The asset was a rental home office or home office improvement within a home. So this is a full rental. So say yes, and then it's calculating for us the depreciation amount for 2023 is $12,364 in our case. So they will transfer the amount to the correct one for you. Great, thank you. Continue. So there we have it. This is our property asset. And then we just click done. That's pretty much it. And then you can review this carryover. And I'm just gonna kind of continue with the flow to see how the number is calculated. So let's look at explain our taxes. So remember our income. So we had the $150,000 in W-2. It was due there. And then the capital gain tax was $364,001. So this is gonna go to Schedule D, and our Schedule E, rent and loyalty pass-through income, is minus $5,364. This is because we had depreciation, and then it's give us a loss for our Schedule E. And with that, our total tax is $75,000, $421 on the federal side. And of course, you know, you're gonna have state too, right? So let's look, because our income is higher, right? So you get hit with this net investment income tax. It's a 3.8% above the threshold. And then this is estimated tax penalty, which usually it might happen if we're not planning well for this, right? So you can see that TurboTax can be a useful tool, not just when you're reporting your tax liability for the year, but just say that, hey, you're planning to sell your property next year, and you kind of know how much you're making every year, so it doesn't really change much. So you can use the same number from your W-2 or other type of income and how much withholding you have for this year, and just kind of play the scenario for next year. So what if I make the same amount of income, or you can give a little bit more and a little bit less withholding, so because, you know, up to you. You want to be a little bit more conservative. So you can see that, oh yeah, look like I'm owning a lot of taxes here. Yeah, so my taxes is going to be $88,000 just on the federal side. And then how much are you putting it from your get the withholding from your W-2, right? Just assume that you got $17,521 withholding, so you're gonna have this balance due. So you know that, hey, I'm gonna sell my house next year, so maybe I better put in some estimated tax payment now, so I don't have this big amount of due coming at me, right? Or as soon as you make that sale. So remember, in our example, we sold this house in September 30th, right? So we received the money by then, and we know that we have the money to pay our taxes, and we can play around and estimate it back in 23 how much we probably gonna owe. So we can start making payment right now, assuming that is September 30th, 2023. So you have the money from the proceeds, so you can use TurboTax to estimate it. So isn't that wonderful, right? You don't even have to pay a lot, and you just pay for a couple $100 and get this all calculated, especially if you are a DIY person, that you are more comfortable knowing the number yourself, right? And of course, like number from 22, like from 23 to 24, the number might change a little bit, but you kind of know the ballpark, right? So you can do a lot of estimation, because if you had used like another tax planning tool, they might not even take into account many of the changes that is anticipating to happen next year, like say the standard deduction. So 23 gonna be a little bit lower than 24, but this is pretty good. So if you are unsure, if you have the money, like you know that you're gonna be due $70,768, maybe you can put in $75,000, so you can sleep better at night and get some refund back. So there you have it. You can see that how much of an impact. So you can see that you're gonna have to pay extra, right? So basically about $97,000, $98,000 what you're gonna have to pay out of the capital gains. And the capital gain is about $364,100, and then you pay almost $100K out of it. So you tell me, like, do you want to look at other strategies such as installment sale to save this amount of money, put more money in your pocket? If all the conditions are right, why not, right? So let's move on to the next video.